Hey traders, welcome to this week's Forex Focus. I hope you are all doing well and you've all had a good week in the markets. Now, if you were just looking at the majors, it's probably been a little bit of a frustrating one in that the markets, and they did provide some volatility, but there wasn't really a lot of follow through. And in terms of the opportunities that we were looking at, which was ultimately to buy into some dollar strength, apart from the big gaps at the beginning of the week, there wasn't a lot of opportunity out there to be able to play that one out. I mean, there were one or two, but for the most part, it was a little bit frustrating. As you can see here from the Aussie dollar perspective, it gapped down and then it pulled back. From the data cupboard, we had the ISM manufacturing come out. We've actually sort of like the first number that's in expansionary territory for a while now. However, the services came out and they were a little bit down. Then non-farm payrolls came out at the end of the week and was below expectations. So you can see there that, you know, from the Federal Reserve perspective, they've got a little bit of a job on their hands with regards to what they're going to do with interest rates. Because on the one hand, you see an economy that's in expansionary territory. Then on the other hand, they aren't adding as many jobs as they would like. And then if we look at other regions of the world, you've got the Bank of England coming out last week and cutting interest rates, which was a big one for the market. Initially, we saw the pound sell off as a result, particularly if you look at like the euro pound, but it kind of recovered towards the end of the week. So as I said, there wasn't a lot last week that really sort of moved the market. So this week we're going to be looking at a lot of the same opportunities as we were last week. So if I flick through the charts here, and let me go across to the daily just so we get a big picture very quickly. We had the big levels in. So we said we were going to sell from this level here if the market pulled back to it. And if it got through there, then we would sell from a little bit above this level at the 0.6440 on the Aussie dollar. The euro dollar, we've got these two levels in here. We can see that the market gapped down, then it recovered, and then it sold off a bit. The pound dollar, you can see again the gap down. So we've got the initial dollar strength as the market opened down there, and then dollar weakness throughout the middle of the week, and then Thursday and Friday, a little bit more strength again. And that really kind of played out pretty much across the board, which is why I say that we're looking at very much the same sort of opportunity there as we were last week. Obviously, you can see here that the dollar franc came down to the level that we wanted to take the sell from. So hopefully some of you were able to, take the buy from. So hopefully some of you were able to jump on board that one. That was probably the only one that actually played out last week. Dollar yen has broken down quite a lot. It's at this big level over here, as you can see, of so we've got a previous level of resistance there, which we were hoping would provide support, and if not there, then down below there. So as I said, apart from the dollar franc, which is sat in a little bit of money, if you put your 2 ATR stop in there and a 2 ATR target, you're not quite at the target yet. It's about halfway through to the target, but that was really the only one that gave us any sort of an opportunity to get involved in the markets. Looking into this week, so we know where the levels are based on last week. They're all exactly the same levels. But what we now need to do is we need to drill down to a shorter term time frame. Say, well, how are we going to play this out? Because let's say the markets, they don't go back to that level. Okay, so because of the big gap last week, and then we had the recovery of that gap, or the closing of the gap throughout the rest of the week. You know, it's a little bit of a long way for the market to go to reach, particularly the second level, so to speak, but maybe the first level is something that it can get to. But then from a shorter term perspective, we don't want to be waiting for that. So we want to see, well, how is it that we can take advantage of the moves this week if they happen without having to wait for the market to get to those levels? Because as I said, I'm not entirely convinced that they're going to. Okay, at least not for a lot of the pairs. So the Aussie dollar might get to this first level, as you can see here. I doubt it will get to that second level. The euro dollar has already started to sell off, and so it's unlikely it will come to that level there. If it does, of course, then the way that you'd play it is that you would take the sell from that level there. You don't necessarily need confirmation, but what we need to do is we need to see how is it that we can take advantage of the moves without having to wait for that. So rather than looking for the bounce, can we take advantage of some of the momentum that might start to play out next week? And the way that we're going to do that is we're going to use the 10 period moving average here as our guide is to where momentum is. And the way that you want to play it is if the market is below the 10-period moving average, and we're below the sort of like the key level. So if the market, we look at these levels, say if the market's, above that level, then potentially you're looking for longs. If it's below the level, then you're looking for shorts. Now in this case here, it's below this particular level. So we're not expecting it to start climbing up towards this resistance area over here. So what we want to do is we want to look for sell opportunities. And the way that we'll do that is essentially play the price action below the 10-period moving average. There's a number of ways that you can do that. First of all, you could take the break of the low or wait for a close below temporary low. So we've got that over here on the euro dollar. So you could get in on a sell as the market were to open here. If you wanted a bit more confirmation, you could wait for the market to get through the 1.0306 level here. So set an order just a few pips below there to enter once the market breaks that low. Like the 1, 2, 3, 4 and 5 day high and lows are usually quite good levels to take breakouts from. So that would be one that you could play there in the euro dollar. We jumped away from the Aussie dollar, so let's go back to that and just see how it is that we could play that one. The Aussie dollar, there isn't an opportunity yet, but I would be waiting for the market to start selling off below this level here at the 0.6251. Once we get below that level, that will pull the shorter period moving average, so the 10 below the 200, which is like the big one that all of the markets pay attention to. So once we get below there, the moving average is trading below there, then we would look for some sort of either a bearish momentum candle or some sort of a price action setup to be able to get us in on that trade there. That isn't there yet, but that's how we'll be looking to take that trade. Then we jump across to the pound dollar. Now this one is a little bit more tricky because with the pound dollar, what we have is we've got this trend line moving up here. So we are looking for a sell. We're below the level where we would even consider looking for a buy. So we're in short territory over here. What I would say if this trend line wasn't there would be to take a look and take a break of 1.2358. You could do that. Okay, you absolutely could do that. 2 ATR as your stop. But the one thing that I want you to pay attention to is this upward sloping trend line over here, because this has the potential to provide a little bit of support for the market and to give it an area where the market can bounce from. Now, obviously, we had some negative news last week out of the Bank of England cutting interest rates, but a lot of that has already been digested, all right? That's already been taken into account. So now it's going to be, how is it that the market are looking at the US? And if they're going to look at them in a negative light, then this might be one of the better pairs to buy into, to sort of to express that particular view, because a lot of the negative news has already been taken into account in the market. There's already been discounted. Okay, so but if we get below this trend line here and we get a big close below, then that's going to be an indication that the market does want to go lower. So we will be looking for sells if that were to happen. The New Zealand dollar, a little bit similar to the Aussie dollar in that, it's a little bit further ahead because the shorter period moving average here is already below the longer one. But essentially what we're going to look for is a bit more momentum into this, because at the moment the market is moving sideways. You're almost guessing which way the very next direction is going to be. So we want a little bit of confirmation there. If the market can break through this level, give us a big close below that, then we would be looking to sell. If the market starts to rally, then as with all of the pairs, we're looking for our key resistance areas to sell into that particular rally. So, the Aussie, Euro, Pound, we've got the big levels there where we will be looking for sell opportunities. The dollar CAD, so this one over here, it gapped up massively, as you can see over there, and then it just spent the rest of the week selling off. Now what we're looking at is a buy from this particular level. What I would do here, if you're not already in on this trade, is similar to the New Zealand dollar and the Aussie dollar, is wait for the market just to prove that it wants to go this way. It's for it to really sort of like digest all of the information that's come in over the last week. And what that means is that we'd be waiting for the market to close above 1.4369 with a strong bullish candle. If we get that, then we can start looking for a buy opportunity. Now with the dollar CAD, it is at a big level. So if we were to get a strong sell below this level, so a nice big bearish candle that closes below this level, then we would be looking for a sell down towards the next support level at 1.3949. You don't have to wait until it gets to that level, but that's just where I would be expecting the market to move towards. You'd put your 2 ATR stop in, have the 2 ATR target, so you'd be a one for one there. But essentially this is a trade that you could be taking in both directions. Then we have the dollar franc, which, as I said earlier, is pretty much the only one that played ball last week. So the market came down to our level, our support level. You would have put in a 2 ATR stop. If you would have put that in on the daily, then it will basically take you down to around this sort of level here. So the market didn't get anywhere near your stop loss. From a take profit perspective, you'd be halfway on your way to taking profit. Okay. If you took it based on the 4-hour chart, so you took the 2 ATR on the 4-hour chart, that takes you at sort of like around 25, let's call it 26 pips. So it's 52 pip stop, 52 pip target. You would have been able to take profit on this last week. So you can see the market still doesn't get near your profit target, your stop loss, sorry. But from a profit target perspective, it does get up towards the 52 pips. It goes beyond there, allowing you to get out there for a one-to-one. And that's one of the reasons I love these sorts of trades. So many rookie traders, retail traders, they're looking for confirmation. And yes, in this video here, we've talked about some opportunities where we want a little bit of extra confirmation, but in those instances where you don't need the confirmation, it makes for a much better trade because you don't need the market to go that far in order for you to be able to take profits. You don't look for the big wins. You just look to make, little bits of profit, but you do it often. You do it consistently, and you'll see your account grow as a result of that. Now, going into next week, we can see that the market is trading above the moving average. It's bounced off of this level here. So essentially, I am looking for a continuation. This is a big bullish momentum candle that printed on Friday there, you can see here. So you could be taking a break through the high at 0.9107 if you wanted, or if you wanted to be a little bit more conservative, you wait for a little bit of consolidation, and then you trade the breakout of the consolidation to the upside. If the market were to sell off from here, I wouldn't buy again immediately at that level because we've already had that reaction, and we would have a lower low here or a lower high here than the previous high over there. What I would instead do is I'd wait for the market to come down towards the support level at 0.8922 and then look to become a buyer from that particular point. I'd also potentially look for a tactical sell. So if we don't get a continuation here, which is what we're expecting, and it's all about the, what your expectations of price action and what it does instead is really what makes you a trader. Okay, so you need to understand that when we get into, or when we're looking at a particular price action setup, there is an expectation of what should happen, and the rest of the market are looking at the same thing. If that doesn't happen, then that tells you that something is wrong with that particular setup, and oftentimes it means that it was a bit of a trap to get people long into this trade, and then really the real side of the market are the sellers, and they're going to push it down. And that's exactly what we would get here. So if we don't get a follow through here, which is exactly what we'd be expecting, then essentially that means that the market is more likely going to push to the downside, at least temporarily, so we can then look to take a tactical sell. Okay. The last one is the dollar yen. So the dollar yen here, we've got an initial reaction to this level over here. So you could have taken a buy from this level if you wanted to. From an ATR perspective, you'd want to take your ATR stop here based on the daily because the market is already trending to the downside on the 4-hour. Okay, I wouldn't envision taking a trade from the 4-hour chart going into next week. So you can see that the moving averages are quite far apart, indicating that momentum is very much to the downside, and we would want to see some sort of a reversion to the mean, if you like. So we want to see those moving averages come together a little bit more before we'd be convinced that the market might go long. However, if you look at it from a daily perspective, then you've got a little bit more wiggle room because then you're trading within sort of like a harmonic price action in that this is a regular swing in the market. So you could be looking to take a buy from that perspective. Your stop there would be 150, so about 300 pips from that level, okay, unless you were going to, as we talked about last week, take a buy from here and then a second buy from that level there, which you'd be well within your rights to do. But if you didn't, 300 pips would take you down towards that sort of level there. So you still got plenty of room in. And then on the upside, you'd be looking to take profit from this area over here. If you're not in this trade, you could look to initiate a buy. Okay, again, you would take your 2 ATR stop from that level there, so you'd actually have a bit more of a positive reward to risk ratio trade if you were to do that. I think that this one is unlikely to completely sell off, so I am looking for a buy when the market comes down towards 148.66. But if truth be told, I think that the other pairs are presenting better opportunities. If you're willing to take a look at the crosses, there's some awesome opportunities there as well. So this one, I might just wait to see how this one plays out as opposed to sort of predict this particular market. I do think that dollar yen isn't just going to completely sell off from this level here, but this can be a bit of a volatile pair, and if there are better opportunities out there, then it's best to see what the price action looks like next week before jumping into this particular trade. Okay, thank you so much for watching this video. I hope you get good value out of it. Remember, I'm not telling you to take these trades. I'm just giving you a bit of a narrative as to what's going on in the markets, the way that I see the markets panning out. And then if that can help you with your own trading, then fantastic. Don't use this as trading advice. Just use it as a bit of a compass, if you like, to guide you towards potential opportunities. And then you do your own due diligence based on that. Okay, thank you so much for watching. If you haven't subscribed to the channel, please make sure that you subscribe, you hit the bell so that you get a notification, and I'll look forward to speaking to you in next week's Forex Focus. Take care now and have a great week in the markets.